What's going on, guys? Welcome back to another weekly portfolio update. If you haven't yet signed up for Trading 212 yet, you can get a free fractional share worth up to £100 using my link down below, first link in the description. So as you guys can see, we've had another bad week in the stock market. Now that's kind of back-to-back weeks. We've, going from the all-time high. Yeah, we've had quite a correction over the past month. The Nasdaq is down about 1% over the past month. That's after its massive rally up. So from all-time highs, we're down a lot more than that. So my portfolio has followed suit, coming down. It hasn't actually come down as much as I thought it would. Tesla has held up surprisingly well. If you look at Tesla over the past week, we're only down 2.6%. Comparing that to the Nasdaq, we're actually down less than the Nasdaq's down. And considering Tesla has a higher beta, yeah, Tesla's held up surprisingly well. So, yeah, a lot of you guys have been saying, there's a lot of risk being so heavily into Tesla, but we've actually held up better than the tech market. But obviously, not financial advice. That this could not continue. This isn't guaranteed to continue in the future. But I do think Tesla, amongst all of these other companies that do have some premium valuations, Palantir especially, that's had a massive correction from over $200 to $150. Obviously, I still think there's some ways to go. If you compare that to Tesla, I do think Tesla is fairly valued, but that's nothing. That's not saying that it can't come down. It could come down, and I expect it to come down to about 350. Following the broader market, having a bit of a correction. And if it does get down to 350, I will continue to buy more in my invest account. Obviously, I can't buy more in my stocks and shares ISA, as I've maxed out my allowance and I've only got £26 cash. So yeah. Anyway, guys, let's have a quick look into my positions. So Tesla, I'm still up 48%. So if it does continue to correct, that it will just eat into my profit, unrealized profit, rather than my initial capital, which is why I'm not too worried about having such a high allocation to Tesla, just because even worst case scenario, it eats all the way into my profits. Because I'm holding for such, long term, I'm really not worried having such a big, percentage of my portfolio in Tesla, just because I do see there being such an asymmetric risk in terms of downside to upside potentials. If you look at my smallest position, Nvidia, I did kind of buy this at the peak, just because I did used to have a share of Nvidia that in April that I did sell after the market recovered a bit. And then I'm putting that in Tesla. But yeah, I just wanted to buy back the share of Nvidia, kind of almost to track the price of it. Really, there's not a lot of money in it at all. If you're going to Robinhood, yeah, I am down now in Robinhood. So I did watch the podcast of Vlad, the CEO of Robinhood, gave on the Iced Coffee Hour. Ever since he did that podcast, I've been quite bullish on Robinhood. Obviously, it's to be expected. If you look at Robinhood over the past year, nearly up 200%. So having a correction, even though their earnings were good, kind of pretty similar to Palantir. The valuation, people are like just selling right now. And then obviously my other position, IRN, it's kind of a more speculative play. There's a lot of competition in terms of the cloud computing for AI. I know they do have their Bitcoin mining business, which is kind of the main revenue driver for them right now. Hopefully they can diversify that. But obviously, as you guys know, with crypto, it's kind of why we've seen Robinhood fall as much as it has. Bitcoin has been falling, which obviously revenue for IRN would be falling as they get a lot of their revenue from Bitcoin mining. So my portfolio currently is sitting at £138,000. So not too bad. If you look because if you look on the 3 month, I'm still up 24% over the past 6 months. Oh no, 6 months, 3 months, which is really good. I'm really chuffed with that. Obviously, the 1 month I'm down £13,000, 9.1%. On the 1 week, I'm down 3,300, which isn't too bad, considering that's less than what the market sold off. So obviously, because Tesla hasn't really gone anywhere, but obviously that's not to say it can't go down like 20%. But I am pretty confident that Tesla is fairly valued. Obviously, not financial advice, so your own research, and that right now with Tesla there is such an asymmetric risk. I know I've already said that, but like the potential of I think this time next year it could be double what it is now. Whereas, worst case scenario, maybe we go back down to 250. So yeah, that's what I mean. Whereas there's an asymmetric risk, there's a lot more upside potential than downside potential, even in the short term within the next 12 months. But obviously, I don't recommend people buy stocks just to hold for 12 months. If you're going to buy a stock, you got to look at 5 years down the line, 10 years down the line. Obviously, all of the money that's in this portfolio, I'm not even going to touch for the next 5 years. Obviously, I am building up some capital outside of my stocks and shares ISA, and that will be used to buy a house. But obviously, none of this money that is in here, I'm going to be reliant on to buy a house in any way whatsoever. So, yeah, if you guys look at my portfolio, we've got 457 shares of Tesla, up 48%. 10 shares of Robinhood, down 9.42%. 10 shares of IRN, down 27.48%. 1 share of Nvidia, down 11%. If we look at the asset allocation, we're seeing, because all of the other stocks have had a correction and Tesla hasn't really had that much of a correction. Like, obviously it is down, but it's a normal amount considering like the wider market. Like, it's down as much as the S&P 500. So, and considering Tesla has a beta more than double the S&P 500, like if you say the S&P 500's beta is 1, Tesla's like a 2.3. So it should be down a lot more than it is. And that strength in Tesla, I think attributes to it being pretty fairly valued in terms of all of this AI bubble. Like, when we're seeing how like the sort of valuations being pushed out, I think, considering, I'm not saying Tesla's fairly valued in the traditional sense, but I'm saying in this whole new AI era that we're in, where everything has a premium valuation, I think Tesla is pretty, fairly valued, which is why it hasn't seen that much of a correction compared to some other of the stocks. Yeah, so that relieves my total unrealized result at 47.29%. Obviously, cost basis £94,000. But yeah, anyway, guys, thank you so much for watching. Please make sure to like, subscribe. It really helps up the channel. Yeah, we've been smashing it on the videos lately. So yeah, and I'll see you in the next one. Goodbye.